Boom! The markets go bullish. This is D70 here on Wednesday, August 26, 2015, and a huge pop in the markets. The Spider, which is the ETF on the S&P 500, up 3.96%. The Diamonds, or the Dow, up 4%. Gang, the Dow was up 619 points. Massive rally today. Q's up 5%. Small caps only up 2.5%. It's weird saying only 2.54%, but relatively speaking, banks up 3%, confirming today's rally. Silver taking it on the chin, down 3%. Gold up by 1.36%. US dollar up 1.4%. VIX dropping around 10%. Here we are looking at the Spider. Check this out. Now, the question is, where are we going to go from here? First and foremost, this rally by no means tells us that we're out of the woods. Now, one thing that I teach in mentoring is that when on a drop, on a pullback, a healthy pullback, candlesticks will get smaller on the descent. Nasty pullbacks, actually, the candlesticks or the trading ranges increase in size. That's precisely what we're seeing here on the broad markets. Now, anytime you have huge moves like a Dow dropping by over 1,000 points in a day, I mean, that is mammoth by any stretch of the imagination. Anytime you have that, you're going to have wild swings in the markets. Now, I called for a 400-point rally, and we got 400 points yesterday, and then we since crashed. Today, 600-point difference from yesterday's close. 619 points on the Dow. Very bullish to see. But like I said, expanding trading ranges on the descent is bearish. That is no good. It's a breaking of bullish sentiment. Now, the question is, where is this dude going to go? Now, we'll bring in some technicals here that might give us an idea of what we could be looking at. Use a fib retracement. I'm setting that at very specific locations. Now, here is what we're looking at. I believe that we have a decent chance of getting to 1965 on the S&P before we hit resistance. Or on the Spider, 196.55. But the 61.8 Fibonacci retracement area puts us just shy of 2,000. On the S&P 500, if I bring that in, I've got the same lines here. That same area is 2003. So remember, 2003 coming across is a major area that I can see that being a target, big target. On the Spider, I see 199.88 being the target. So I see another huge couple potential days here, another decent few days to close out the week. And I see this as being nothing more than a very healthy bear pullback. Matter of fact, on a rally here, what I foresee is a reversal taking place at some point, maybe at one of these levels. And once that reversal takes place, I'm going to load up short for a more follow through to the downside. That right now is my professional outlook as a technician, doing this 17 years and also being one who has lived now through 3 of these major corrections. So that said, I am signing off. Make sure that your first stop is a free trading videos or free online trading education.com and fill out the form for the 101 courses, and those can be found at the home page. Just fill out that and you'll get free emails of training to get you started. But the thing that you definitely want to right now, especially with the markets bouncing, here is a great time to get the hedging. Go to Grok Trade and then get the hedging course down here. I gave you guys a big special. It's an hour and a half worth of information. It's very advanced. You'll have to watch it a couple times, but this is how you're going to save your money in the markets. This is how to safeguard yourself from any more hurt. So if you like the video, like it, and if you respect it, share it, and certainly make sure you follow me on TradeView or tradingview.com or there at YouTube.